Good morning, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is the Kickstart video. Today's date is February 5th, 2024. In this video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. I'll start by taking a look at the euro versus US dollar. Recall from Friday, we had much stronger than expected US jobs reports, and we're seeing yields move higher in the US today, and that is helping to push the dollar even higher. On Friday, we came down and tested the 100-day moving average. That's the blue line in this chart. But we did hold support against that level into the close. And then in trading here today, as you can see, this is again the 4-hour chart. The price in the Asian session traded above and below that 100-day moving average. And the last few bars have in the European session have taken a move to the downside. That move to the downside moves away from the 100-day moving average, which is now resistance at 1.0776. If the price stays below that 100-day moving average, the bias remains more to the downside for this currency pair. The next target off of this chart comes against this low right here. They're going back to early December. Might also corresponds with these swing levels through here and this swing high right here before moving to the upside here. So that level comes in at 1.0723. The 61.8% retracement of the move up going all the way back to this time right back here. I guess this is the September low to the December high. That level comes in at 1.0712. That's right here. And that would be the next target on the downside on a break of the 1.0723. So now 12 to 23 is the next target on the downside. As you can see, we're trading 43 here and making new lows here for the euro versus US dollar. So the bias remains to the downside. We're seeing further momentum in that direction. Taking a look at the dollar versus yen, we moved up and actually surpassed the high price that we saw in the month of January. That level comes in at 148.80, and our high price today came in at 148.824 before rotating back to the downside in the Asian session. And now we're moving back to the upside, currently trading at 148.504. So the price is heading back up toward that 80 level. Looking at the daily chart, the 80 level is not only important from this high right here, but also going back to this low right here. Both those levels came in at the 148.80 level, so breaking above that level would open the door for a move up toward this high right through here. These highs right through here coming in around the 149.70 level. I know that's about 190 pips away, but we are into another trading range on a break of the 148.80 level. So that's going to be a key level to get to and through in trading here today and going forward. If we get above that level, it's more bullish for the dollar versus yen. What would hurt the bias here? Well, we did try to break back below this high right here. This high goes back to January 29th. If we try to do that again, then that may lead to further downside momentum. As you can see in trading here today, again, this is the hourly chart. The price did break below it here, but we did sort of find support right against that that level right there before moving back to the upside over the last few hours. So a move below that level would probably hurt the bias in the short term for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And you may be surprised, but we're outside of this red box. This red box that's been defining the trading range for a long time here. Admittedly, we went below it briefly right on this day right here, but the momentum could not be sustained. And in trading here today, we did break a little bit before rebounding back up toward the 61.8. Found willing sellers, and you can see the selling intensified the next time the price broke outside of the red box. And we've seen increased momentum breaking even below the 200-day moving average at 1.25609. As long as we stay below that level, the bias remains to the downside here for the sterling versus US dollar. So watch that level, currently trading at 125.51. If we go back in time, take a look at this yellow area. Goes back all the way to this area right through here. So that area comes between 125.58 to 125.71. That might be another level or another area that traders might look to stay below now to keep the bias more to the downside. Now that we're outside of the red box below the 126.26 level, around that level. So there you have it. The dollar's moving stronger against all the major currency pairs, and in two of them breaking some key technical levels. The dollar versus yen needs to get above the 148.80 level to make its break. But certainly the dollar is king. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.